If you're trying to buy a home in New Jersey and you keep hearing about NJHMFA, but nobody can clearly explain how it actually works, this video is for you. Because today I'm going to break down everything you need to know about the NJHMFA program. We're going to talk about down payment assistance, income limits by county, debt to income restrictions, purchase price limits, credit requirements, and 4 real examples of buyers using the program in New Jersey. By the end of this video, you'll understand exactly how NJHMFA works and whether it could help you buy a home. Let's get into it. NJHMFA stands for New Jersey Housing and Mortgage Finance Agency. This is a state housing agency created to help New Jersey residents become homeowners. But here's something most people misunderstand. It does not actually lend the money directly to borrowers. Instead, the program works through approved lenders like me. Those lenders originate mortgages using programs backed by agencies like Fannie Mae or Freddie Mac or government loans like FHA. The NJHMFA adds special benefits on top of those loans like down payment assistance, special interest rates, first-time buyer programs, expanded income limits. And that's what makes it such a powerful option for buyers. Let's talk about the feature that gets the most attention, the down payment assistance program. It's called the Smart Start, and it provides either $10,000 or $15,000 towards your down payment and closing costs. The amount depends on the county where the property is located. Counties with $15,000 assistance are the following: Bergen, Essex, Hudson, Hunterdon, Mercer, Middlesex, Monmouth, Morris, Ocean, Passaic, Somerset, and Union County. Counties with $10,000 assistance is Atlantic, Burlington, Camden, Cape May, Cumberland, Gloucester, Salem, Sussex, and Warren. Now, here's the important part. This assistance is structured as a second mortgage with 0% interest. There are no monthly payments on that second mortgage. And if you stay in the home for 5 years, the entire amount is forgiven. That means $10,000 or $15,000 essentially disappears after 5 years. There's also a larger assistance program called the First Generation Homebuyer Program. If a buyer qualifies, they receive an additional $7,000. So the total assistance becomes $17,000 in counties that normally receive $10,000 or $22,000 in counties that normally receive $15,000. To qualify as a first-generation buyer, your parents cannot currently own a home, and you cannot have owned a primary residence within the last 3 years. There's also a special exception for individuals who have been in foster care in New Jersey. This program dramatically increases the assistance available for many buyers. Now let's talk about qualifying. The minimum credit score is typically 620, but the debt to income ratios depend on the loan type. Here are the general limits. FHA loans through this program is a front end ratio of 40% and a back end ratio of 47%. A homeward bound FHA program, front end at 40% and a back end of 50%. Conventional HFA Advantage program, there is no front end limit. Back end ratio can go up to 50%. But there is a major overlay rule. If the borrower's credit score is below 660, the maximum debt to income ratio drops to 45%. This is one of the most common reasons NJHMFA files fail late in underwriting. The program also have income limits. These limits depend on county, household size. For example, in counties like Hudson, Mercer, Camden, and Atlantic, the limit for a 1 or 2 person household is about $131,700. In counties like Bergen, Passaic, Monmouth, and Ocean, the limit is roughly $137,000. In higher income counties like Hunterdon, Middlesex, and Somerset, the limit increases to about $153,000. For households with 3 or more people, the limits are higher. Many counties allowed 150,000 to 176,000 in household income depending on location. And in special urban target areas, the limits increase even further. Cities like Newark, Jersey City, Patterson, Camden, Trenton, Elizabeth can have income limits exceeding 180,000 or even 214,000 depending on household size. So the program is not only for low income buyers. Many middle class households qualify. Another important restriction is purchase price limits. These limits vary significantly by county. For example, in counties like Mercer or Atlantic, the limit for a single-family home is roughly $544,000. In counties like Bergenton or Camden, the limit is about $692,000. But in higher cost counties like Bergen, Essex, Hudson, Middlesex, Monmouth, Passaic, and Union, the purchase price limit can exceed $1.25 million. This surprises a lot of buyers because many people assume the program only works for inexpensive homes. But in many parts of North Jersey, it can apply to homes over $1 million. Now, let's go through 4 real examples so you can see how this works in practice. Example 1, we have a Newark buyer. With a purchase price of $450,000, he's using an FHA loan through Homeward Bound. Down payment required is 3.5%. That's about $15,750. But Newark is located in Essex County, which qualifies for $15,000 Smart Start assistance. So the buyer only needs to bring about $750 towards the down payment, plus closing costs. If the buyer qualifies for the first generation program, the assistance increases to $22,000. That could cover the entire down payment and a large portion of closing costs. Example 2, an Ocean County buyer with a purchase price of $520,000. Loan type conventional, HFA Advantage. Minimum down payment of 3%. That's about $15,600. Ocean County qualifies for $15,000 Smart Start assistance. So the buyer's required cash towards down payment drops to about $600. And if they qualify as a first generation buyer, the assistance becomes $22,000. Example 3, a Camden buyer for a purchase price of $320,000. Loan type FHA. Down payment required $11,200. Camden County receives $10,000 in assistance. That means that buyer only needs about $1,200 towards the down payment. If they qualify as first generation, the assistance becomes $17,000, covering the entire down payment and some closing costs. Example 4, a Mercer County buyer. Purchase price of $500,000. Loan type of FHA. Of a down payment of about $17,500. Mercer County qualifies for $15,000 Smart Start assistance. So the buyer needs roughly $2,500 towards the down payment. With the first generation program, assistance becomes $22,000, covering the entire down payment and more. There are 3 common mistakes buyers make with NJHMFA. First, they assume the program covers all closing costs. It helps significantly, but buyers usually still need some funds. Second, buyers don't realize household income matters. Sometimes a spouse or a household member pushes the income above the limit. Third, buyers ignore the 660 credit score rule for DTI. If your score is below 660, your maximum DTI is capped at 45%. That can affect the approval. NJHMFA is one of the most powerful homebuyer programs available in New Jersey. It offers up to $22,000 in assistance, flexible credit guidelines, higher purchase price limits than most people expect, and income limits that allow many middle-class buyers to qualify. For many people, this program is the difference between renting and owning. If you're thinking about buying a home in New Jersey and want to see if NJHMFA works for you, leave a message in the comments and I'll get back to you. Because when structured correctly, this program can dramatically reduce the amount of cash needed to buy a home. And if you found this breakdown helpful, subscribe to the channel. I create videos explaining how mortgages actually work so buyers can make smart decisions. And as always, I hope this helps.